Well, let me go ahead and just, for those that missed out on the first part of it, we've got a lot of news out this week. Just as Tyson said, we've got a lot of news out this week. We're going to focus on the fundamentals, but also go ahead and connect the technicals together as well. We want to make sure that the technicals and the fundamentals do line up with each other, because we are technical traders, but we use fundamentals to give us sort of an idea as to what the news is doing and how it's affecting our technical analysis. So it's very important to connect the dots with the two. And so, Chris, once again, how you doing, buddy?
I am doing great. We were just talking earlier. The weather's finally made an official turn for the nice side. So it's 70 degrees, no complaints, and markets are looking great for this week. We've got some awesome opportunities. Tyson and I release some good videos and content next week for probably the next, I'd say, 1 to 3 months. We've got some incredible opportunities, not just in stocks, but also in the currency market. So definitely want to take a lot of notes today for everyone that's watching.
Sure, absolutely. All right, well, fantastic. Well, let's go ahead and kick off. We've got 30 minutes to go ahead and crush out the details of course, what fundamentals we need to pay attention to this week, and then, of course, what pairs we're looking at and how the fundamentals are going to affect those pairs. So let's start off, and I'm going to start off with Tyson. Let's go take a look at the week fundamentals, right? And I'm going to go ahead and show everyone exactly what we've got with the fundamentals. We've got the Aussie data coming out this evening, or at least early morning, all right, at around about 12:30. So just after midnight, we do have the news coming out, and this is the as we can see right here, it is the Aussie data. I know, Tyson, you're looking at the Aussie JPY, right? And so, how's this going to affect your decision on based off the news?
Yeah, technically speaking, I talked last week, as Chris just mentioned, we had actually sent out kind of a new forecast prediction last week. We had, first of all, guys, I gotta pat ourselves on the back. We started to position late March into an Aussie rally prediction forecast that all of us were talking about, and just an absolute phenomenal trade. Aussie rallied big off of those lows in March through April. But it's actually really interesting because it's a similar setup, just the opposite direction. We've went too far, too fast. We didn't have quite the rally like we had the sell-off, but it has come up a lot across the entire Aussie pairs. Now, there's two core Aussie pairs that I'm looking at that over the course of the last few days have kind of underperformed the others. Those two are the Aussie CAD and the Aussie Yen. I have more of a weighting on the Aussie Yen because of some of what we're going to talk about in a little bit here, because I'm bearish on the market. I think we're going to have another kind of flush down, and there's going to be a risk off type of trade. And with that, the Japanese yen should strengthen. So the Aussie Yen is going to be one of my favorite pairs. But here's the deal. I was actually late last week, I was looking for a push potentially up towards 71, 71.50. Based on what happened on Friday's daily bar, I don't necessarily think that that's going to happen anymore. So I kind of, what I've done is I want to be conservative on this. I don't think we're going to get up to that 71.50 or so level that I was looking at, or 71 level that I was looking at. But I do think that we're going to get a little bit of a rally maybe into the news, or we might have this kind of whipsaw where the news comes out tonight. They maybe maintain interest rates where they're at, but they're kind of bearish on their statements, right? So they don't lower interest rates, but the statement is kind of cautionary, kind of like what Warren Buffett is talking about today, and everybody like, oh, we're a little concerned. So we could see this kind of spike higher into levels where I want to short at, and then followed by a downward move. So just real rough levels that I'm looking at is right around this 86.40 level, 86.40 to 86.50 level. I don't think we're going to get above Friday's daily high, and I think shorten if we get near that daily high again, right around 86.40 to 86.60. I think is going to be a really, really. And we talking about. I'm sorry, 60, sorry about. Why do I keep saying 86? 69.40.
Yeah, I was going to say, are we talking about Aussie JPY?
Yeah, sorry about that. It's 69.40 to 69.60, right in that area. I think is going to be a really nice. So I'd love to kind of start looking to. I'm hoping we get a spike up into the fundamental data because they keep rates the same, and then they start to be a little bearish, dovish is what they call it, with the statements. And so we spike into those levels, let's say at 69.40, start to position short, and then look for that flush down. My target on this over the course of the next few weeks, and it might happen pretty quick depending on the statements, is right around 65.40, 65.50.
Okay, so you look for a downside move on Aussie JPY, and you're using using that technical analysis based on what the news is what the news is saying tonight, right? Keeping the rates unchanged.
Well, actually, I'm using the technicals based on a lot of different factors. I'm looking at kind of short-term accelerator stuff. I'm looking at a lot of stuff that's happening on a shorter-term basis. We're starting to see some signs of turning, and so technically speaking, I see a turn happening. But this is more. I'm using the fundamentals tonight as kind of the driving factor of why I could get in. So again, what I'm hoping tonight is I don't want to just jump in right now, especially with the way that today's daily bar is looking. I don't think it's a great thing to do. So what I'm hoping is we get a spike up into the news or right after the news, and then traders start to parse through what the statements were, and they say, "Oh, wait a minute, that wasn't all that great," and the markets then start to sell off. So establishing a trade right around that 69.40 level. Not right now. 69.40 level, I think, will be good. So essentially like a 90 pip rally up, followed by what would that be? That'd be a close to a 400 pip move down. Yep. Oh, did it? Can you guys hear me? Okay. All right. Hopefully you didn't miss a lot of that. Hopefully, Chris, Gary, you guys kind of understood. I know it was a mouthful, but hopefully that made sense. Okay.
No. Well, I'll piggyback on that. The Aussie yen. It's not. We've already. So hey, on that, we took some profit. Last week was the week, so we closed up last week. Ended up making close to 4,000 pips for everyone in the trading room. Yeah, it was a nice little chunk that only took about 4 months. But I mean, look at it, 4,000 pips, 4 months. That's 1,000 pips on one currency pair every month. That's the way you look at it. You talk about investing or position trading. That was a great position trade. So and it's one leg. We're going to get another big chunk of Aussie New Zealand profits. So good stuff. But Aussie yen. I'm going to piggyback on that because as Tyson was mentioning, we did a great job on the Aussie rally. Had that prediction in March. I was saying last week in this session, Gary. In fact, this session we started off saying, hey, Aussie has had a great run all through April. So your job for last week was to do your best at protecting those profits. And don't be surprised if you see some short-term movement on Aussie, which would be Aussie weakness. What happened on Thursday and Friday? Tons of Aussie weakness. We saw Euro Aussie and Pound Aussie respectively move like 500 pips each on the shorter time frames. Like we went down to some fresh lows on each of them, and they popped up like in 2 days, Thursday, Friday, like 400 or 500 pips each. So I think we nailed that prediction really, really well. And I hope everyone's paying attention, of course, protecting their profits and then short term. Sure. I had a lot of traders that were long Euro Aussie, long Pound Aussie last week, short Aussie CAD, and made some really good chunks of profit last week. Like I said, I'm going to piggyback on the yen pairs because I have an entire yen prediction that is looking at what the reality is. And then again, I'll tie in the stock market to this. I've been watching the S&P 500 just like everybody else has, but I'm looking at some major indecision right now. Now, we know the saying, sell and may go away. This week is a big number for non-farm payroll. We have U.S. jobs on Friday, along with CAD jobs. We have rate decisions from the Bank of England, rate decisions from the RBA. We're projecting 16% unemployment for the U.S. with 21 million jobs gone.
Right.
I mean, it's like the numbers are staggering. And so to have those type of unemployment figures, to have that type of reality with the U.S. job market, April's optimism, I think, has run its course. So if there's any kind of last minute positioning, it's like the exhaustive rally, as Tyson says, too far, too fast. And what we saw with that recovery in April, I think is now the reality sets in. We might have the optimism priced in. We might have the reality that's about to take over. So if anyone's looking at the chart of the SPY, or the S&P 500, I'm looking for, there's an April 20th low. Let me go to that on my chart right here. And Gary, you can possibly bring that up. But there's a low on the SPY It is the April 20th daily candle. It's or the April 21 daily candle. So that daily candle, I'm going to let the bears do whatever they need to do to break that low. But if that low gets broken from April 21st on a daily chart, Aussie yen is going to be a bearish trade. CAD yen should be a bearish trade. New Zealand yen, dollar yen, euro yen, pound yen. I'm looking at the entire yen basket to favor yen strength and a sell-off in the stock market, a rally in the VIX. I mean, stock wise, you can play inverse ETFs. You can sell the stock market. You can basically buy the Japanese yen. More than likely, that would be the currency play that we see reflect that type of movement. So I think that the yens are going to be very strong here over the next 1 to 3 months. I think we have essentially a summer sell-off. And whether or not we see that right now and it happens violently, or it takes most of May to maybe play out. Maybe it's indecision and volatility through most of May where there's not a lot of decision. And then, as they say, sell may go away. Maybe it's the end of the month. And then it takes us into a summer trend where we might not see a bottom until August. And that's exactly what happened last year. The yen pairs got very strong through the Japanese yen Golden Week holiday, which goes until Wednesday of this week. So if we start to see that postured move from Friday, which Tyson said that bearish candlestick on Friday is a huge one, as long as those highs aren't taken out, I think that's a very valid sell-off point to build some momentum and see some Japanese strength this week. So that's what I'm looking at. I already have some systems running to start selling Aussie yen, euro yen, dollar yen, pound yen, New Zealand yen. So like I said,
let's slow down there, Chris. Let's just slow down there. Let's just go ahead and take a look at firstly Aussie yen. We've taken a look at, right? Yep. We've looked at Aussie yen, and I'm going to go ahead and just flip it over back again right here.
Go to pound yen for me, Gary. Let's go to pound yen. I think that's a really great looking pattern.
Well, great. I'm glad you want to go to pound yen because we've got, of course, UK data coming out this Thursday, and that is also the rate decision. Going to keep the rates unchanged. We've got, of course, the Aussie data coming out as well tonight. That could, or at least early morning, that could also create some sort of volatility in the JPY cross as well. So this is pound JPY right here.
Okay, yep. So the level I'm looking at on pound yen is a continuation pattern. So we have that giant slide in March from high to low, which is up to 144 all the way down to 124. The continuation pattern I'm looking at is a bear crown, and it's a continuation. If the bears can break below 132.00, I want to see a 4-hour, at least minimum 4-hour candle closing below 132.00. And if we close on the 4-hour, and ideally, if you want to wait a little bit longer for slightly better confirmation, a daily candle. But a 4-hour candle or a daily candle below 132, I am a seller going down to target those March lows at 124. So right there is around an 800 pip area on the pound yen that a system, a trend system, a deployment, a robot can pick up, 2 or 3 entries on decent pullbacks, Fibonacci sequences, dynamic resistance, you name it. Like I'm looking for something to help me pick up some trades going for that 800 pip move and probably end up capitalizing on, 1,200 pips, 1,500 pips, something like that. But that's a really solid break below 132. So I think the reason it's important to watch that, as Gary shows in the chart, is 132, you can see the support. So we've come down to test it. Now, if we test it and bounce up again, okay, fine. We're playing with the range until that breaks. So it's not officially bearish to me until we break below 132. But when that breaks, I am definitely a seller going down to those March lows.
Well, let's talk about this, right? We've got news coming out this week, and we've got pound news, we've got Aussie news, we've got non-farm payroll, we've got Canadian news coming out, jobs coming out for the Canadians coming out on Friday. We've got all this news coming out this week. Do you think that this week could just be a choppy week, and the market's not really going anywhere and just digesting information, and we're only going to see a move coming out in the second week of May?
I mean, that for a really heavy news week, yes, I think that makes perfect sense to have the news be a bunch of noise. A lot of times we will see that, in the Forex market, news is either priced in ahead of time or news is going to create a lot of noise and create a bunch of indecision for traders to stay on the sidelines and not be trading. So, look, like I said, I'm looking for, a 4-hour or daily confirmation. That's it. So if that happens, I'm in. If it doesn't happen, I stay out. So, short-term opportunities is fine. But look, Tyson and I were talking about these 500 pip areas, 1,000 pip areas. You're going to see it happen. It may not be today, it may not be this week, but you're going to see it happen. And if it does, then you have ways to participate. So it's not like we have to be pulling the trigger right now. It's like let it confirm, let price come to you, let it get into your wheelhouse. Once it comes into your strike zone, then take a swing. So that's what I'm waiting for.
Okay. All right. Well, that makes sense. Okay, great. Now, but based on the prediction, Tyson, you mentioned the prediction for that's currently in play right now. What is that prediction? What pairs are we focusing in on right now? Do you have, Tyson, your mic?
Yep, double check. I can't hear you, Tyson, either.
All right. Well, no, cannot hear you. But all right, let's switch over to Chris. Chris, if you can go ahead and what are the predictions that we have right now while Tyson's fixing up his mic there?
Yeah. So last week, Tyson and I posted predictions. One would be the Aussie snapback or the Aussie pullback. And essentially that goes the opposite of March. So we had this, March we were predicting, again, all from technicals. It's not like we're guessing and hoping and wondering like, oh, can this happen? It's like these are all based on good, solid, sound technicals. So
right.
It's an Aussie.
And this is Aussie US dollar, right?
Well, this is. I know Tyson posted workspaces on the Aussie CAD, the Aussie yen, the Aussie dollar. I think those are the three. I know that also in the short term. I mean, Gary, you and I talked about the Euro Aussie, Pound Aussie last week, which we are expecting. Those covered a lot of ground last week, so I wouldn't be super bullish on Euro Aussie and Pound Aussie because they made such a strong move last week. But Aussie CAD has a lot to go to the downside. Aussie yen has a lot to go to the downside. Aussie dollars, you show there on the chart, has a lot to go to the downside. Those three right there. So write those down. Aussie CAD, Aussie yen, Aussie dollar. Those have even in the near term for this week, they have, I would say, 200 to 500 pips each across the board to just start.
And we're looking for sell-offs on these pairs?
Correct. Yep, that's correct. So taking that April bullish rally, and we are shorting that, looking for near-term, shorter-term bearish confirmation, and seeing the Aussie get a little bit weaker this week. Yep.
Well, I'm going to look at this right here. I'm looking at the daily, for instance, on the daily chart right here on the Aussie CAD, and I can see
that looks awesome, Gary.
That looks really good. A nice rising wedge right here. We're at top of resistance right here. I think Aussie CAD, and by the way, I was bullish on Aussie CAD. I had a lot of positions on Aussie CAD that I released last week as well before the end of the month, and I'm like, I'm done. This is not breaking through. I'm going to get out of this trade completely. And all of that decision was based on what we're seeing right now on the chart right here. Everything's indicating that Aussie is going to fall. So I'm right on board with that prediction right there, and I think you guys did a stellar job picking up these opportunities.
Hey,
so
Gary,
Aussie CAD right here.
Can you hear me now?
Yes, Tyson's back. All right, Tyson,
real quick, sorry about that. I was having some technical difficulties, but
that's fine.
I agree 100%. So, in actually going back to Chris's pound yen break below those lows and looking at the SPY break below those lows, I was just looking. I started buying puts last week in the SPY, and it was a better time to buy them last week. I started buying the 293. This is the beautiful thing about options, everybody. I started buying the 293 June put on the SPY, and I paid $13 for it. And that was I think it was last Tuesday. That put is now trading for almost $20.
Whoa,
think about
nice.
that. So
Good
you're
catch.
talking over a 50% return in a week. That's amazing.
Wow.
Options are awesome. Now I'm looking, and what I really like is the structuring, and I don't want to get real technical, but I really like structuring a straddle position, and this leads back to the pound yen and the yen pairs. But I love the technical setup where if we start to break below those lows you were talking about, Chris, that we put in, was it mid-April? Those mid-April lows, that key level on the SPY.
Yep.
We start breaking below that, I see a pretty clean shot back to 2,500 or 250 on the SPY. And that means that those puts will continue to pay off. So, and I actually think that so essentially it's this. I believe that the S&P 500 is going to test April lows in May. Okay, so that's the idea. April lows in May. For me to play that, I can go out to the end of May, the May 29th expiration, and I can buy the 281 put. So basically take a short position on the put, and I can spend $9.50. My target on that is going to be 250. So I'm going to have a target of 31. So that's a 3-to-1 risk versus reward. And I actually think it could happen fairly quick. So I'm willing to buy the 281 put for $9.50, have a target of $31 because I think we're going to hit 250. But that plays right alongside with that pound yen position that you're looking in. If we start to break those lows, then we'll get a flush down and see probably 5, 6, 700, 800,000 pips down to the downside in the pound yen.
Yeah.
But another way to play it was with the options. When the market falls, yen pairs are typically going to fall. The Aussie, the pound, the New Zealand, the CAD, they're all going to fall against the yen, just simply because there's a flight to safety. And the Japanese yen is looked at as a safe haven along with typically the US dollar. So love those plays. Also, going back, kind of wrapping this back to the Aussie CAD that you were just looking at. Couldn't say I love this trade also. However, I think the move is going to be very similar to what I said in the Aussie yen. I think shorting right here, you got plenty of room to the downside. But I think we're going to get they're going to keep rates the same tonight. Market's going to have an initial bullish reaction on that, but then they're going to start reading through the statement. And then, so I think getting up to right around maybe this 90-80 level on the Aussie CAD. And then in that level there, I think that's going to be a beautiful level to save some money. Save yourself about 50 pips rather than jumping in right now and then looking for a flush down from that level. So I love the trades that you guys are talking about.
So you're talking about the possibilities of the news coming out tonight, and actually given some sort of upside move on Aussie, just a short-term rally on Aussie, but then further moving south on the overall.
Yeah. So essentially, where the Aussie is right now is not a bad trade. It's not a bad short. However, I would rather be on the sidelines more right now. Wait for, I think you can get a 50 to 100 pip better entry across the board after tonight's announcement as we spike into some of these kind of upside levels and then look to short from that point. And I think that next shorting opportunity, so you could save yourself 50 pips or so and then set yourself up for that next, 400, 500 pip move down.
Sure.
I like that a ton. I think those equal highs are great, Gary. If you have that on the chart, those equal highs are on 91.15, 91.20. Looking for indecision tonight, but I mean, I just think conservatively on your rising wedge you have on your chart. I mean, if we're falling into like 8,800, there's also a really nice harmonic pattern that we talk about technically quite a bit in my trading room. Gary, I know you use that as well. 8,800 is a nice little merge between a weekly harmonic level. So we're talking, trading right now at 90.30. If we hit 9,100 and fail, I would love to take that short at 91, take it all the way down to 88, add some positions to it. So here's my plan, Gary and Tyson. I'm going to short it at 9,100. I'm going to short it again at 9,180. That's a yearly pivot. So that's a resistance point. That also gives me kind of a little bit more flexibility to stay smaller on my initial trade size, level in, and scale that kind of current 150 pip area to make sure that I'm right on direction and try to hold that down towards 8,800. So that's my plan on the Aussie CAD.
Right. Yep. I love the way the weekly closed out last week. Specifically after I taken out all my buys, I love the way the Aussie CAD is set up here. The weekly indecision candle right here with a good solid wick to the upside. Shooting star is a perfect pattern you'd like to see on the weekly time frame, and it's just below that previous high right here, indicating that previous high is holding as a resistance as well. So yeah, I'm game on the sells. Let me just go down to the 4-hour time frame. I want to just see here on the 4-hour. The 4-hour at the moment right now is hitting. If I go ahead and let me just kill these patterns right here. If I look over here on a 4-hour, this downward trend line, okay, that can be adjusted. Okay. Yeah, that can be adjusted. Okay, good. I wanted to make sure that we're staying behind that support, and I see as I go ahead and move there, it is adjusted. So there it is. All right, so we're definitely below. I'm looking at my oscillator below right here as well, and it's also indicating we're in a sell zone. We just don't have. I'd like to see some sort of divergence. We may need to go down to like a 1-hour time frame to get a nice level of divergence, and that's what I'm seeing right here. I'm seeing momentum moving up a little bit, so it gives us that little bit of a correction move before price starts moving back down south. So yeah, I'm definitely with you guys on the Aussie CAD. Let's go ahead and jump into Aussie US dollar. That was another pair that you picked up and spoke about based on the prediction as well. Aussie US dollar, let's go to the daily time frame. And
so this one's super clear to me, Gary. It's about as obvious as it can get where I want to trade. We've got a nice 2-bar level of supply based on Thursday, Friday's bars. We come up to today's lows at that 64.90 level. That's a beautiful. That's actually a setup where I'd actually be willing to just set a limit to sell at 64.90, place a stop above last week's high, and then target 59.40. I think a trader could get into this trade. You think about this. On that trade, you'd have 545 pips worth of reward and about 75 pips, 80 pips worth of risk. That's pretty darn nice.
So what would you anticipate to be the move for the week?
Yeah, so what I'm expecting is the same exact that we talked about before, where that spike into those key levels. So I'm looking for a spike back up to about 64.90. 64.90, I want to get in at 64.90. And actually,
you want to start selling at 64.90. So as the price comes back up here, retest it back here, you want to go ahead and sell it down?
Exactly. Yep. And I actually believe that last week's high most likely will be held. I don't necessarily need to have a stop there, but I think you'll be safe enough placing your stop at about 60. That'd be about a stop of about 65, 75. And then and then I have a target. My target's all the way down to 59.40. So I think we're gonna see a pretty. I mean, it's not gonna just get down there in a straight line, but ultimately, in fact, if I had to tell you, I think we're actually gonna go down to about 58.40 if I had to be key. But I'm gonna target about 59.40, just on the safe side. But I think it all starts tonight. I think it after that spike into that level, I think any strength that we see in tonight's announcement needs to be sold. And I think we see a nice, at least for the next few weeks, I think we see a nice flush down. And so I love the Aussie dollar right now just because it's such a key level. But a lot of these, Gary, a lot of these look the same.
Yeah. I think technically they look awesome. I mean, so it's interesting because, our prediction was really solid in March. In the wake of Aussie weakness, we're like, look, we need to buy the Aussie. And here we are in the wake of Aussie strength saying we need to sell the Aussie. So, I mean, we are definitely getting ready for the move. And I mean, last Friday was kind of your first sneak peek of Aussie confirmation to show bearishness. If we get that wave of risk off, the Aussie and the New Zealand are probably the two currency pairs that are going to feel it the most, and that's exactly like a repeat of March. So, I mean, I think these are really good trades to consider. And if you want volatility and opportunity, I think those Aussie and New Zealand pairs showing weakness in a time of risk off, like if the mode or the mood of the market is risk off, then those pairs will definitely be moving.
And real fast on that, the main reason, and I talk a lot about this in global wealth session stuff, the reason why, if the market starts to sell off, that the currencies like the Aussie and New Zealand start to get affected the most is because I always say you got to understand what the currencies do. The currencies have purposes, and there's currencies that finance the world, activity, and there's currencies that kind of they do one of three things. They either fuel the world, they feed the world, or they build the world. And so the Aussie is very tied to hard assets, gold and iron ore prices and steel and different things like that. And so if we're going through a slowdown economically, then China's building less cities and we're doing less infrastructure builds and different things like that. And so it's going to put pressure on the Australian currency. Same thing with New Zealand, a lot of soft goods, a lot of meats and cheeses and different things like that they sell. Sure. And so if we're slowing economically, the worldwide diets we're going to trade down in our diets. We're going to eat less milk and less, or we're going to have less milk and less cheese and less meats. And so exports are going to be
more
dampened.
More ramen noodles.
Yeah, exactly. Exactly. So it's important. And then the other currencies, the three main funding mechanisms in the world, there's actually four, but and I'll kind of rank these in order. It goes typically yen, Swiss, dollar, and euro. And those are typically what we're looking at for risk on. Our risk off to get back into risk off. So if we're in a good market environment, then you want to buy the Aussie, New Zealand, CAD, pound. If we're in a bad market environment, you want to buy the yen, the Swiss, the dollar, and the euro. Essentially, is what I'm saying.
Right. And from a technical perspective, we go back to the technicals right here, and you take a look at the Aussie US dollar in particular. It was setting up with and this is how we anticipated the move towards those levels that it turned. Is because it was set up in a 3-drive pattern. And so the 3-drive pattern actually created that sort of move right here. So we had to go in ahead and create this first move right here. This was the first drive right here. This was the second drive, always going to go to the 123, the 127 right here. So the 127 was the second drive confirmation. And then we pull back and retested, or at least tried to retest wave 1. And then the third drive was back here at the 127 right here. We spoke about it a couple of times, not in just this session, but in our trading rooms as well. We spoke about the market actually creating that resistance here. And we said that even though in this upward channel, price is not going to get to the upward channel because we've got a lot of resistance coming off that third drive pattern. So with that third drive right here, this is where we're anticipating. We spoke about sellers looking to sell the market short at that point because we anticipated price to move down. On the 4-hour time frame, the H4, you would see actually perfect divergence on the top. We spoke about it in a few sessions. We spoke about Aussie divergence that is setting up, creating a sort of a resistance level for price to move back down south. Now, if you take a look over here, I'm a big fan on addressing the market based on wave structure. So if we're talking about a small correction, as Tyson spoke about on this particular pair, then I'd like to go ahead and move it down to like a 1-hour time frame, or even a 15-minute time frame is actually showing some good value here. But if I go ahead and bring it down to the 1 hour right here and plot it open right here, the first thing I'm seeing right here is that we did have a swing going south, then we had a pullback out. Anytime I see a nice little pullback like we're seeing right here, it indicates that we have structure in play. And so this would be my first structure right here, coming down from there to there, then pull back. And if we actually go ahead and pull in some fibs on this and label the fibs down here, the one thing I notice here is that we have a 1.618 right here. And that now becomes resistance. And so if I look at this and say, well, this could be a wave structure from all the way down here. And anytime I see the 2618 come into play, I know that there's definitely going to be a bounce. And we're starting to see a bounce towards the 1.618 of the previous swing. So it gets a little bit complicated. But if you keep your eye on the 1.618 as a resistance level right here, and the bands, look at these ribbons that we have right here. It all merges at the same place. So I'm going to say, Chris and Tyson, I'm going to say that we could go ahead and test 64.50. I don't know what your number was there, Tyson and Chris. 64.50 seems like a good level for the market to come back to retest before we start seeing another sell-off. So tonight, or at least early morning, if I'm going to be awake, if price moves up to those levels right here, it's going to be key for us to go ahead and look to start selling at that point. But we're going to be chasing after just a short-term target for right now at around about 63.20 before we have another correction move before price moves upside. And this is how I look at the market, right? I look at the market based on the fact that we're going to see a lot of news come out this week. And that's why I asked the question there, don't you think with the news we can see a little bit of choppiness? And my choppiness doesn't necessarily mean there's no trading opportunity. It just means that we're not seeing some strong trends in a direction. It means that we're going to get like we're seeing right now, a bit of a move up, a little positive move up to 60, what do we call that number, 64.50. So 64.50, 64.50. See a positive move up to 64.50. Then a downside move to about 63, write it down, 63.20. And then 63.20 starts seeing another rally that's going to take out this week's high, but just take it out for a temporary period and then turn around and start continuing its fall. That's when we're going to see the big strong move to the downside. So I'm looking at this,
with
and
that,
I'm saying,
Gary, real fast on that. So that whole idea, you're thinking, I agree. You're thinking last week's high holds.
Oh yes. Last week's high is going to hold. And that's what I'm saying.
Yeah, and I think that's where we're all agreeing on that. Like, hey, between current price and last week's high, amazing selling opportunities right there. Yep.
Sure. Just simply this. This is what I'm looking at right here. So as price goes ahead and rallies up a little higher right here, goes and tests that level there, then we'll look at a continued fall. And that's why I said this week's going to be a little choppy because it's going to create opportunity. Now, I think this is key for a lot of traders to be able to acknowledge that even though the market is going to be selling off, it's all about pricing, where you get in. So like, for instance, if you're thinking about selling at the top right here and you're looking to maybe jump in on a 1 hour time frame and you want to pick up a risk-reward ratio of 1 to 3, you may not have a 1 to 3 risk-reward ratio down towards this level. So this is where traders get really confused and frustrated because they're getting on a perfect trade, right? They're getting over here just as price turns around. But because I trade in a larger time frame, what happens is the risk is, let's say, 100 pips, and they're chasing after 300 pips. But there's not 300 pips before it hits down to this level. It's a perfect trade, good direction. But because we're hitting that support down here, and they may only offer 200 pips to the downside in profit, which is a risk-reward ratio of 1 to 2, what happens is price moves back up. They get stopped out. They get frustrated. They're like, man, I had the right direction. But what is important to note, it is not the direction and it's not the entry point that was bad. It was how you manage which time frame to actually trade. Because if you pick the right time frame to trade, you'll get in with tighter stop losses, pick the right direction, right entry point, and your risk-reward ratio is going to be fine, because with tight stops, you'll be able to reach your risk-reward ratio with inside the allocated space that the market's going to offer you trading opportunities at. So it's all about gearing up, gearing down time frames when it comes to the situation like this. So I like the direction. I like the opportunity. I just do want to go ahead and throw in that and say, hey, pay attention to the time frame that you're going to be trading if you're going to be using risk-reward ratios as your primary targets.
So I want to take this one step further, and I love what you were just talking about as far as how to manage the trades. And so I'm gonna do a little bit of analysis and a little bit of comparison on the strategies I would use. So I think the Aussie pairs are at great levels to turn something like Turning Point on, because here's the brilliant part about Turning Point. Turning Point will do an amazing job if we're sitting at extreme levels. Like back in March, when we looked for that rally in the Aussie pairs, it did amazing because it catches those bottoms. When we're sitting at high levels like we are right now, it does amazing. Here's where it doesn't do that well, because it doesn't lose money. It just kind of sits dormant, is when we're already starting in the move. So the way that I would look at this is, as we're bumping up towards these high points, these multi-week, maybe even month and a half highs, turn something like Turning Point on, and then as the move starts to accelerate to the downside, turn Turning Point off, and then go to something like Right Trader Max. That's where you're going to continue to flow within the direction. Right Trader Max is going to get more of the body. Turning Point's going to do a really good job of picking the tops and the bottoms. And so I would do kind of a combination. Turning Point right now, probably for the next few days. After we start to get the move in our direction, flip off Turning Point, flip on something like Right Trader Max on the downside. What do you guys think of that?
I honestly, I'm going to give Chris a turn to actually comment as well. But I think that at this point, any sort of range-bound trading strategy like Turning Point,
Perfect Storm,
target trading. Chris, what is the one that you use? That what's it?
Perfect Storm.
Perfect Storm.
Yeah.
Perfect Storm.
Yep.
I think those are great, and I think the trend-based trading strategies are also going to be great, but then they just need to maybe gear it down and take advantage of a smaller trend or a short-term trend rather than focusing on the bigger move. So I think
we're kind of saying the same thing. It's trading the range bound right now, and then as we start to accelerate in the downside, then flip to the more of those trending strategies to really get the most bang, catch that full move.
Absolutely. Yeah. I think it's key, and I think this is gonna play out for most part of May. I think May is going to be that type of month for us. I'm just looking at the way the markets are set up technicals. We had very strong moves, as Chris pointed out, in March. We've had March and April. We've had some really good strong moves in the crosses, and now we're just really going to get to a point where it's now going to balance itself out, get a little bit of stability in the pairs, by trying to figure out whether or not the data is reflecting what we've seen in the technicals. Then we're going to start seeing the trend starting to break out. And I don't know, we've had a lot of this, and we spoke about this before. We've had a lot of the currency pairs moving during the summer periods because the liquidity started to go a little bit thinner, less trading being done, but then we have these news events that take place that start pushing the market in a direction. We start seeing very strong trends taking place. I don't know if you've noticed over the last few years, it's been happening. And so I'm thinking that maybe this is another way for the market to go ahead and just create this range bound and what I like to call expansion moves, where it goes range bound and then expands through the range and then starts trending. And I'm thinking that we're heading into that expansion phase at the moment right now in the month of maybe May, June, and then July, August, September, we're going to start seeing some bigger moves.
It's interesting you say that, and Chris, I'll let you jump in here too. But I used to teach a lot of classes on the three kind of environments, and I love what you just said. There's range-bound environments, but typically what happens is we move from trend to range to volatility, back into some type of trend, then range, then volatility, and that's the market kind of trying to after it goes through a trend and it consolidates a little bit. Then it kind of flushes itself out and reestablishes that next trend. And we've got to make sure we have the right trending strategies, the right volatility strategies, and the right range bound strategies. So that's really key.
Yep.
I mean, look, we have so many different approaches to the market, but it's funny because like even talking turning point, right trader max, perfect storm, somebody mentioned supply and demand. It's like, look, they all work, but you're only as good as your market conditions. So if you're looking at range-bound strategies, I mean, then make sure you're applying it to a range-bound market. So like for example, last week in my trading room, we went to my perfect storm has been running since June of last year. I've only had 2 months where that thing has given me any problems, and I've worked my way through trades, and it's actually a great system that trades primarily range-bound currency pairs. But I've handpicked those currency pairs. They're low volatility. They're mostly range-bound. They don't like the trend. That's perfect for me to use range storm and active storm. The trend storm is good too if you're trading trends. But I can be way more precise, way more active with right trader max. I can use momentum breakout. But it's like we have ways to, and this is why, maybe not every trader has multiple accounts. But if you had like a trend-based account and then a range-based account, Gary, I know you use that with target trading. You talk about letting a system be active during any daily or monthly or weekly target and let it trade and know that yes, it's going to miss targets, it may face some drawdowns, but it ultimately works its way up, accumulates positions and trades and makes a ton of profit when it comes back to those target levels, whether it's percentages, pips, or dollars. Meanwhile, we also have trends that will pop up and be forecasted like we're doing right now. And when those trends start to take place, I mean, everybody looks at a market from highs to lows and like, oh, what an easy way to trade the trend. Right, but what happened the 2 months before that it took that time to set up? Most traders don't have the patience to wait for the trend to break or wait for the trend to confirm. So, it's like, look, the market is dynamic. So we're always trying to shift gears to go from a trend to a range or from a range to a trend. And it's not a hard adjustment. It's just having that spatial awareness to recognize, like, if the market's going sideways, don't expect the trend system to work very well. So just sit on the sidelines and wait for that to break a major support level, a major resistance level, and then get back into a trend. Meanwhile, a trend system works.
Or go ahead and break it down into a lower time frame, so gear it down, and trade those smaller ranges within inside the consolidation. So if you've got a consolidation and you've got a 250 range consolidation, then you can still trade it like, I mean, Chris, we trade in a 1 minute time frame. You're doing it as well. 1 minute time frame on right trader max, and we're making some good profits with the smaller moves in the market. So you can do that, but you're right. I'm agreeing with you, but I'm also saying there's another option to trade that. Yes.
No, but you're right, because traders. It's like I make it sound more complicated when it's like range to trend and figure it out. But instead, you're like, hey, if you have a trend system and it does well on the 1 hour chart for several weeks, and then the market starts to go sideways, well, rather than forcing that 1 hour chart, which isn't going to do very well, go down to the 15 minute, go down to the 5 minute, the 1 minute, and guess what you're going to see? The same conditions and rules apply that gave you great trends the first time, just on a different time frame. So for traders that like to trade trends, you can always be a trend trader. And and I mean, we know that realistically on the larger time frames, the market doesn't trend all the time. But if you go down to the right time frame, you can always find a trade, and you can follow the same rules. And the best part about trend trading is low risk, high reward. So with trend trading systems and confirmation, your risk is very small, and you go after those 2-to-1 risk rewards, or those 3-to-1 rewards risks. Go after it to win.
I agree 100%. And one thing that this leads me back to is every trader watching this, every trader that comes into the trading rooms and in the sessions, they aspire to be us. They want to be that professional trader who's able to, I honestly say, I want every trader to get to a point where they no longer need us anymore. That's the whole goal. And they're just coming around because they want to. But it takes time. You can be a master of one strategy, but still not be a master of the different market environments. And so that leads me back to make sure, here's the holy grail of trading. I say this constantly, but this is the holy grail of trading. You should find those who are doing what you desire to do really well and you just follow them until you make it your own. And so be in our trading rooms. If you like this kind of stuff, make sure you guys are around us as often as possible, because the more you're around us, the more that what we do is going to rub off on you, and you're going to start to do it your own, and you're going to make it your own.
Sure. Yeah. All right, guys, we've got to wrap it up here, but let me go ahead and give Chris, I don't know if you want to share just 30 seconds, just a final 30-second closing.
Yeah. So I'll go back, and I asked this question last week. If you had March to trade all over again, what would you do differently? And I think most traders would agree that rather than being stuck on your heels and backpedaling and reacting to what the market gave us in March, instead look at that we're kind of anticipating that it might happen again. And May is the month that it gets set up. Last year and the year before that we had April and May trends that set up movement through the entire summer. Last year, the pound was the one that got crushed in April, in May, and it trended all the way through August until it bottomed in August. So we saw this last year with May in the stock market, and also with the Japanese yen. May was a strong month. Japanese yen strength. We're looking at the same thing right here. If the stock market sells off, if the Japanese yen gets stronger, if risk-off trading gets up, these all line up in the currency markets. They all line up in stocks. And I just think this is a good month to be ready and I was using this in my weekly outlook, to be positioned accordingly and to be poised for the confirmations that are coming our way. Because we had a good start last week. Sell may go away, and it was May 1st on Friday. Boom. Friday was a very big bearish candle. So the market's speaking to us. And I think if we pay attention to that and use good risk management, good equity management, trade good confirmation, we're going to find some great trades. So I'm excited about what May can give us. It may not be the most optimistic sounding to be like, hey, look, coronavirus is the real deal. Companies are cutting back and filing bankruptcy. Like, this is all scary stuff. But the reality is, as traders, investors, this is where a lot of money can be made. So that's why we're here, and that's what we'll be doing. All
right, Chris. Well, thank you very much for your 30-second closing. We really appreciate that. Just kidding, bro.
It had to be like 35, 40 seconds.
That's Chris's 30 seconds. So, Chris, appreciate that. That's absolutely good advice. Tyson, 30-minute
my
closing.
30 seconds, I'll take less than 30 seconds.
I said 30 minutes, dude. I didn't say 30. I said 30 minutes closing. I'm just kidding.
Yeah, I think you do. You look at what happened in April, and the exact same thing is going to happen on the opposite direction.
Sure. Sure. Oh, that's fantastic. Great closing. There. Hey, listen here, guys. I wanted to say this as
right?
Yeah, exactly. I want to go ahead and say this.
Hey, Gary, your mic, your camera's off, I think.
Note that the trading rooms are there for a reason, all right? Absolutely there for a reason. The way the markets are moving currently right now are creating great opportunities. But just like I mentioned earlier on, I mentioned that there's a process, all right? And when you see the market setting up in a trend or inside consolidation, there's a process of how we trade those. And how we trade it is we use different time frames to be able to trade the conditions that we have. And if we're not aware of exactly what type of opportunity that we have, and we don't know exactly what time frames to use, we may get a little bit tied up in a little frustration because of the fact that we're in the right direction, we've got the right trade, but we're not hitting our targets, and the market turns around and hits in the opposite direction. So the trading rooms are important to you as a trader, especially if you're new to trading or you start to develop your trading style, and you've gravitated towards a mentor. Continue to get into the trading rooms, because in these trading rooms, these type of levels that Tyson spoke about, that Chris spoke about, these type of levels that we're talking about, where to trade at, where to trade away from, and what types of targets to go ahead and chase, are all vitally important to your success in trading. So make sure you guys get connected with the trading rooms, because we're certainly going to be talking about these moves throughout the month of May. I'm going to say March, throughout the month of May. And again, different trading strategies. You heard Tyson speak about turning point, how he's going to approach the market. Chris, the right trader, perfect storm, target trading. All of these things are important, and your success is important to us. So make sure you guys get into the trading rooms. We're definitely going to be having a lot more conversation around this over the next couple of weeks. And in fact, we'll be talking about this next week because I believe, and I think the team's on board as well, I believe this is going to be a great month of trading, provided that we understand which environment and which condition we're trading under so we can make money. All right, guys, well, with that being said, thank you very much for joining us today. And go ahead and do me a favor. If you haven't subscribed to the channel yet, subscribe to this channel. We're going to be posting some more information, doing some more live sessions through this channel. Make sure that you go ahead and subscribe to the channel. Also, go ahead and make sure that you smash the like button, comment, and also not just comment, but to share the video with other traders as well inside your social media. We'd love to get the news out there and let everyone know about what we're doing here in these videos. So with that being said, love you guys, appreciate you guys, and we'll see you all next week. From Chris and Tyson and myself, happy trading.